We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Tom Luongo, producer of the Gold, Goats, and Guns newsletter and blog, editor at Newsmax Ultimate Wealth Report, and contributor to Financial Intelligence Report. Tom, thanks for joining me today.
Hello, Tom. Merry New Year. Happy 2025, whatever you want to call it. How you been, man?
I'm excellent. It's great to speak with you again. And as you point out, you know, it's the beginning of the new year. I find it kind of silly that people always have to, you know, wait for January 1st to make big changes or something like that. But I guess it's a good catalyst and a good time to reflect. And that's kind of what I want to base today's conversation around, or maybe it's a good place to start today, is talking a little bit about this reflection of, you know, being at such a pivotal time, let's say between the election and the inauguration, and thinking back to what Trump really set up in his first term and looking forward and what that sets up and what that means for his second term.
Well, you know, as I've talked about in the past, I mean, I think I've talked about it with you, if not formally on the show, then privately or whatever. And I know I've mentioned in other podcasts, when you go back to Trump's first term, the things that were most consequential were the things that all ran under the radar, right? It was the number of judges that he was actually able to get through. It was one of the few times that he actually praised Mitch McConnell. He's like, you know, this is one of the few things that quote unquote Mitch did right under Trump's first term, which was helping get a bunch of federal judges installed to allow certain things to progress through the court system. Now, you know, I know, like, for example, that Robert Barnes at the time, you know, questioned a lot of these appointments because they were all members of the Federal Society, and Barnes doesn't trust those guys, and maybe so. I'm not that's not my area of expertise, so it's not my bailiwick. So I'll defer to Robert on that one. But that being said, we still got overturning of Chevron, which would have never filtered up through the courts. The Jarkissi case, which has really fallen under everybody's radar. And then, you know, Roe v. Wade and and all these things, these other things that have happened and now have set. And you'll note in the mad scramble between the election and the inauguration, the transition period, the Democrats are trying to turbo and have successfully turbo appointed a whole bunch of judges to lifetime appointments, right? So that's the game. They understand that they have to back off from their legislative agenda because they're not going to have one. And then they also had the turbo, what's the word again? Approve all these judges because there's probably, I'm going out on a limb here, a lot of inconsistencies with a lot of these House races. Like the fact that Trump is coming in with a 2 to 5 seat majority is laughable, right? It should be a 20 to 25 seat majority. We probably all know that. So, and they proved this at the 2022 midterms. It's the same thing. They stole probably 8 or 10 House seats. But if you control the appeals court, then you can stop a lot of this stuff and you can slow down everything from filtering up through the courts. You know, dismiss cases on standing, the kind of standard thing that they do, even if the case is valid. Like they do all sorts of, you know, just blatantly, you know, idiotic stuff, and they do it on purpose. These are not. You have to assume that these men and women are not judges first and political activists second. You have to figure that's the other way around at this moment in time. Otherwise, they wouldn't be on that list, right?
Kind of how personnel equals policy.
Yeah, as personnel, as we like to say, personnel equals policy. Exactly. So now the question I have, you know, now with the questions that we should be looking at. So we got those things done anyway, right? We got Jarkissi, we got Chevron, Roe v. Wade, others, and then you're going to have those same judges, you know, the ones that we got through previously and whatnot. You're going to have a real fight on your hands and a real pastiche or mismatch and patchwork of jurisdictions that are going to be competing against each other and fighting against each other. We're going to have to look really carefully at, you know, which Supreme Court justices and which circuits are certain cases brought in order to ensure, because then that maps to a particular Supreme Court judge. So I'll give you a perfect example of one. Is the beneficial ownership thing, beneficial ownership interest, that we were all almost, the whole, like, every small business owner in America was almost turned into a friggin' felon for not getting some form done that they, the appeals court said no, or the injunction came down and said, no, y'all have to do this. And if you don't do it by January 15th, you're all felons. Right. And this thing is evil because it's absolutely the beginnings of the database to, open up everybody's books as to who actually owns what, because the whole purpose of, we have a lot of, the state law allows you when you incorporate a company here in the United States, you incorporate it with the state. Well, the federal government has no access to that information. All they have access to is what the state's willing to give them. The benefit, this BOIR thing was an absolute end run around that in order to make a database of every ownership of every LLC in the country for every reason to then map and then throw into the AI pool to map who owns what and how, so they can go after their political enemies. And that's and then they're going to hand it all to the FBI or whatever, right? Mm-hmm. Like, you clearly see this is what they were planning. This is what they're setting up. So it was, again, another attempt to create Minority Report, but with more Germans, right? So there's that angle on it. So we had that one. So that one got approved and then stayed, like, in the last. And the best part about that is that maps to Sam Alito. So when it goes to the Supreme, so when it's finally challenged all the way up to the Supreme Court, Alito will strike the whole thing down as unconstitutional. So, but they were trying to, like, slip that one in through the back door between now and the inauguration. So, yeah, it's going to be just a mess going forward. The big win has happened, right? But there's still a massive fight that has to occur. So we had that. We all know about Chevron. I've talked about jarczy in the past. That's the one where, the three-letter agencies can't accuse you of something, then set up a star chamber court and convict you, which is what they did to George Jarczy, and he fought him for 10, 12 years and finally won at the Supreme Court level. So now, every injunction brought against you by the SEC or the EPA or whatever has to go to a trial by jury. Can't be an administrative court impaneled by the agency that accused you. Talk about a kangaroo court system. Last I checked, I didn't think we lived under French law except in Louisiana. And I may be overstating the case there, but the French administrative law is fundamentally different than English common law, which is what most of the country is based on. So I'm not a legal scholar, but I have stayed at a Holiday Inn Express every once in a while. So, but these are things that I'm bringing these ideas up to ensure that everybody understands what the ramifications of stuff are, even if I get a little, some of the little bits and bobs wrong. I'm perfectly willing to cop to that. But the big one clearly was SOFR, right? That that we've talked about many, many times. That the secured overnight financing rate was the most consequential thing that happened during Trump's first administration. And here we are starting 2025 with the euro in free fall, and the ECB desperately trying to hold German bond yields down and U.S. German bond spreads as wide as possible for as long as possible. The UK gilt market is breaking down. The pound is in free fall. Canadian dollars in free fall, and now we have a full on, media attack, media blitz on all of the leaders of the Davosian leaders of the Commonwealth. Keir Starmer, Justin Trudeau. We've gotten rid of Jacinda Ardern over in New Zealand. Justin Trudeau seems to have saved his skin just long enough to stop a putsch by his right-hand woman, Chrissy Friedland. So, like, there's a lot of stuff going on here, and it's all happening within a 3 to 6 week period. It's crazy, but it all maps to the same thing at the end of the day, which is it's all about trying to figure out a way to keep the European Union from collapsing and to destroy what's left of the United Kingdom. end start of World War III with Russia in order to cover the collapse. They need a casus belli. They still do. I mean, we've been saying this for like a year now, and it's the same thing. And every week is yet another provocation, is yet another silly thing that they've done. But we get to the point now where it's, oh, by the way, now Europe is paying 4 times the amount of money for gas, American LNG, than they were for Russian pipe gas, and the Europeans have cut off their own nose to spite their face. But they're doing it. They're literally doing it because they want to engender a collapse, but they want to do so while they control the U.S. politically and financially. And the fact that they continue to run that script when they have neither of those other things tells me that they're out of moves. And okay, cool. I've sworn off popcorn for most of the rest of my life, but I like pretzels. So I guess I've rediscovered my love of pretzels. So I guess I'll just sit back with and do the, pretzel thing for the next 6 months. Because I really do think that we may be within 6 months of a complete collapse of the European bond market.
So Tom, you and I have talked many times about how this game theory fits into your thinking, and how we always need to be thinking of the second and third order effects of, a lot of these, not only the small decisions, but these big, geopolitical events. So what are these second and third order effects of Europe collapsing, as you put it?
Oh God, Jesus, there's so many, right? And well, let's start with the basics. The euro is being exposed as a fake currency. I think one of the things, I don't know if you and I've spoken, I can't remember the last time I was on the show, so I'm trying to think back. It was 6 months ago or so. But at one point, I made the observation that I think I first made it for one of the Gold, Goats, and Guns market reports, but that the whole idea of the petro euro, right? That since the war started with Ukraine, the share of the euro's non-eurozone trade settlement, the amount of trade that the euro settled outside of the eurozone dropped from over 35% to like 13%. And when you do the math on that, that's most likely just all of their energy trade with Russia that was cut out. And then when you stop to think about it, what was happening on that? Europe's running a trade surplus with the rest of the world. And anybody running a trade surplus with Europe, what are they doing? They were buying European bonds. They were buying German bonds, and they were buying, Italian BTPs and French and whatever they call French bonds and all the rest of it, right? And what were they doing? They were creating a reserve. They were creating the illusion of the euro as a reserve asset. Now, they were doing so because of the zero bound interest rates in the United States, negative bound interest rates in deposit rates in the EU. So you didn't want to hold your money in euros. You wanted to create a positive yield spread and throw it into German bunds at 60 basis points, even though if you were losing 10 basis points a year by buying a German 1 year. So I'm now talking about 2021. So they were clearly trying to create and force that into existence, and they were using their effective control over the Federal Reserve and the budgeting process in the United States to get that done. And that's all been reversed. So what's the secondary effect of a collapse of the euro? Well, everybody's bond yields have to be priced properly, and that means that because they're all massively mispriced.
Everybody in Europe,
ours are mispriced. I mean, so I was having a little bit of a conversation with Luke Roman on Twitter the other day about his thesis about the rising dollar and the rising interest rates, and that's going to be really, really bad for the U.S. and blah 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 blah. I'm like, yeah, that's all great if the United States existed in a vacuum. It does not. It just doesn't. Anybody who I'm no offense to Luke or anything, but German bunds are trading at German 10 years are trading at negative 220 basis points versus the U.S. at this point. That didn't happen because the market chose it. That was done because of yield curve control operations by both Janet Yellen and Christine Lagarde. And you can see that in the Treasury International Capital Report. Over the last 3 years, they bought over $1 trillion in the Eurozone of U.S. debt. And they've done that to cap the long end of and this is all long-term debt. This is $1 trillion worth of U.S. debt, like $1.1 trillion as of the The last one it's around 1.08 trillion now after the latest report giving us the October data. But the important thing here is to understand that this has been done as this is not a market. There isn't a market for German bonds. Okay, at this point, the Swiss National Bank has been buying them. The UK market's been buying them. The US has been buying them by the US. Janet Yellen's been buying them by proxy through the ECB and doing yield curve control and everything else. They've been creating a market in these things in order to cap the long end of the German yield curve, in order to then cap the entirety of Europe's. So we've been living under this regime now for so long. We think it's normal when it's not. It's just like Margaret Thatcher has always said. The great thing about socialism is that eventually, it runs out of other people's money. Or that's the problem with socialism. Eventually, runs out of other people's money. And now, when you look at things like the Swiss National Bank is, they're down to 0.5% again. I mean, where's Lagarde going to go? She's got rising oil prices. I mean, Brent crude opens the year up in 2 trading days, opens up $3. Chrissy, got news for you. You're not going to be running 2% inflation with that and paying, 4 times the amount of money for US LNG as opposed to Russian pipe gas. So you're creating an inflation monster. So how are you going to maintain a German 10-year at 2.5% when, if that's what your goal is, and you're still at 3.15%, you're going to have to go back to 4. And that means you're going to have to let the German yield curve rise to 3, 3.5, 4, 4.5, 5, something like that. And I just say to everybody, I'm like, as bad as you think the United States is, and it's bad, I'm not arguing that it's not bad. Like, everybody else is worse because everybody else is biblically short dollars. We're not. We get to print them, like it or not. And for right now, we should be printing them. And then on the other side of it, you can clearly see the American banking industry and the American, I guess the Fed itself, I think by proxy, they're clearly capitalizing Bitcoin as a means by which to keep the repo markets liquid. Tether is I've said this before and I'll say it again. It continues to be a great source of marginal demand for U.S. Treasuries, short-term U.S. Treasuries. That's mostly what Tether owns. Now, it's not a lot of money, but if it's the amount of money that's necessary at the margin to keep the repo markets from going crazy, that 30 or 40 or $50 billion, whatever it is enough, well, then, hey, we're winning. And we have sources of liquidity, and we have sources of, we have a nimble financial system. For all of its, faults, it's still deeper, more dynamic, more liquid than anybody else's. And certainly, if we control the flow of dollars, and the last I checked, the Federal Reserve is doing a great job of controlling the flow of dollars around the world. And anybody who will argue with me about that, I'm sorry, but the Fed's isn't fighting a US dollar index at 108 or 109 or whatever we're going to close at today, because we're doing this on a Friday afternoon. So right after Friday, January 3rd. Like, go look at the year-end closes on everything. And everything points to that we're going to have a big, ugly breakdown. So the big question is going to be on everybody's mind is, if Europe implodes and we start to see these bond spreads start to tighten, meaning they start, German yields start to rise faster, even if U.S. yields continue rising, which I think they will. Now, do I think they're going to go to 7% this year? No, I think they're going to go to 5, maybe 5.25%, because anybody's going to rationally look at the situation and go, hey, I can get U.S. 10 years at 5.25%. Fed's gone down, and I expect the Fed to go to 3.5%.
By when?
Last I checked, and I mean, maybe even 3%. Right? That's a good deal for American investors. It's a good deal for anybody who's exposed to dollars, who books revenue in dollars and needs to it's a positive. That's a positive carry, as opposed to the situation in Europe where they've got to get to 5%, and at that point, all the German banks go tits up. Because I'm an old goat farmer, they go tits up, right? Because after having watched myotonic goats like flop over, and you literally, that's where that phrase, I think that's where that phrase comes from. And they're like, and you're like, there they are. Like, Like, it was really funny. The first time we ever saw one of our coaches do that, we're like, oh, that's where that phrase comes from. I got it now. It's hilarious.
So that's exactly, what I'm visualizing and trying to consider when I'm wondering about these second and third order effects. We see the euro basically collapsing. We see the pound basically collapsing. And as a part of the DXY, as the the big weighting of the DXY, those two combined, that just drives the dollar up. So how does that end up squaring with this idea of Trump needing a weaker dollar during his term to be able to accomplish what he actually wants?
Well, he can do he needs a weaker dollar. Well, he does and he doesn't. Like, he's going to put up protection tariffs. Like, that's going to be dollar positive. But he's going to get the Federal Reserve, and I don't think he actually has going to get any pushback from Powell about this. They're going to get a Federal Reserve that's going to be accommodative. Like I said, I think the market ended the year pricing December 2025 money at just under 4%. I think it's wrong. Sorry, but I've watched the silver futures curve, and before that, the euro dollar futures curve, be very wrong many, many times. So I don't use it as a predictive measure. I have to run my macro thesis and then ask yourself, is the market mispriced? Because if there's one thing that we should take as given in a world dominated by central banks, which is that, well, interest rates are mispriced, that the price of money is mispriced. So that's what central banks kind of do. That's that's what they're supposed to do if they're political entities. If they're not political entities, then they can just be incompetent. And I believe that I still firmly believe that we're about 75% malicious behavior on the part of the central banks and 25% incompetence. Whereas, my libertarian brethren would say it's like 85-15 the other way. And I just don't buy that. We've got way too much evidence in the last 3 years to say otherwise. So, over the last 40 years to say otherwise. So, I think that's more explanatory. I'd like for them to be right, but I don't think they are. So if that's the case, I think Powell needs 3%. And if we get the fiscal cuts and the regulatory cuts and, some kind of tax relief for the middle class in the United States, which the Democrats will, of course, fight tooth and claw because they work for Davos and they're communists, then, but if he gets any of that, you take the dollar positive stuff like tariffs and the and deregulation and spending cuts, and you offset that with a lower cost of capital to allow for positive spread lending, and that's what Trump actually needs. He needs a weak domestic dollar and a strong foreign dollar. Right. He needs high cost euro dollars and weak domestic dollars. And that's the argument I'm making. And what I'm saying is that's what I think they're trying to set up. And I think Scott Bessent understands this. I think I think Howard Lutnick understands this. I think Trump understands it. And I think Powell understands it. So, I chatted with Vince Lanci in the past about these things, and we've, gone to like end game where we both said, well, we're going to eventually have an unofficial closed capital account of the United States. We'll have a domestic circulating dollar and an offshore dollar. It's very true. It's very possible. What's that going to look like? What we're going to wind up with probably is we're going to wind up with offshore dollar proxies. Right. So maybe it's Ripple or Ripple stablecoin. Maybe it's Tether. Maybe it's somebody else's other coin. Like, I don't think Jerome Powell doesn't care if the Eurodollar system wants to create stablecoins. He doesn't want them circulating in the United States unless he controls them. Right. So that's why, the argument I made all through the stablecoin crisis of 2021, 2022 was clearly in my mind, strategically, if I were Powell, I would have executed all of those. I certainly would have executed all those that I didn't have any control over. The ones that were, over in China or Hong Kong or the Caymans or Singapore or wherever. Like, those all need to go. But I know Tether comes out of the Caymans. But you keep one around, or two in the case of Coinbase and USD coin, and you let them trade, as an antipode to keep the Bitcoin markets liquid. And so what is that? And if I'm right about that, then would the Fed be fighting a rising Bitcoin price right now? No. Because if Bitcoin volume stays flat on a day-to-day basis, right, and the price rises, then the market cap of Tether has to rise, because it's just math, right? If 10,000 Bitcoins trade a day at $100,000 a coin, that's X amount of money. That's X number of tethers that are necessary to liquefy that trade. Okay, well, if the price goes to 125, well, then the market cap of Tether has to go up by 25%, or some amount relative to the amount of settled trade at the end of the day. Whatever that functional relationship is, it doesn't necessarily need to be one-to-one. It just needs to be. And that's what we've been seeing. And since the day Trump came in office, I haven't checked the Tether market cap recently, but certainly in the 2-3 weeks after Trump won the election, won the election, we saw these huge jumps in Tether's market cap at the 8:30 open every morning when the New York Fed SOM index opened up, and we need treasuries now, or once the desk opened at 8:30. Tether's like sitting there having to, print tethers to deal with the trading from the overnight markets. Tether trades 24 hours a day, but the U.S. Treasuries, U.S. Treasuries aren't available to buy 24/7, right? So those jumps that we saw in Tether's market cap in the early morning, for the first two weeks, clearly validates this argument that I just made, right? So it just, that all just makes sense to me. And then on the other side of it, of course, is there's gold, and I don't think they're fighting the rising gold price either. Why would they? And then you have to ask yourself, okay, well then, then why was that also tracks with why we finally got Bitcoin ETFs. And finally, somebody finally put enough manila envelopes on Gary Gensler's desk to get the hell out of the way. And that's that. And here we are. Bob's your uncle. Bitcoin's now blessed into the financial system in the United States. We have regular Bitcoin ETFs, which people can trade into and out of in their 401k. We've got leveraged Bitcoin ETFs for the speculative traders to play around with. And those are all marginal sinks for dollars and Tether and everything else. So seems to work for me.
Does that end up kind of putting us in this seemingly odd scenario where these, let's say historically uncorrelated assets, let's say gold, Bitcoin, commodities, bonds, dollar, all kind of go up together because of this, again, this changing world order, or changing lens that we see the world through?
Yeah, no, it really is. I mean, yes. And I know you've interviewed Martin Armstrong in the past, and that I listen to Marty very carefully. I listened to Marty very carefully about this 10, 12 years ago when he was saying this stuff. And I was like, and I just said, no, there ain't no way. No. But I was wrong. Right. So yeah, no, I absolutely see that. And you can see what was really funny is, one of the things I said coming into the end of the year, and I don't know if I said it on public podcast, but I know I said it on the market reports of the patrons. I said, look, just ignore the last 2 weeks of the year. Christmas and New Year's and are fall on a Wednesday. Everybody's going to be traveling. The markets are going to be closed in the middle of the week. So there's not going to be a lot of volume, and there's going to be a whole lot of tape painting, and trying to move markets. And so take that as your base case for what was going on in the last 2 weeks for the trading in the markets, right? That there was going to be shenanigans of for very small or large, values of the word shenanigans. And then expect to see people try to paint the tape in their favor while U.S. markets are in maintenance mode. And you should, and what would you expect it to see? Oil down, euro up, pound up, U.S. Treasuries up in yield, or up in price, down in yield, right? Everything should have been up, and gold down, Bitcoin down. And we saw some of that, right? We saw a mix of that. But what we didn't see was what was really telling was the multiple attempts to try and get the euro to close above $1.04 coming into the end of the year failed. Euro closes at $1.35. Catastrophic annual close for the euro. Catastrophic. Lowest yearly close on the euro since 2002. Okay? Which is when the euro was still trying to get to parity with the dollar and only got there because of Greenspan in the aftermath of 9/11 and the dot-com bust, dropping interest rates real hard, right? So, which also kicked off the gold bull market and all of that stuff. So, yeah, we're going to see all these assets move higher because people are going to move to tangible assets first and repudiate the need for intangible assets, i.e., government debt. And that's the general thesis. And everything else after that is just filling in detail. So you've got the euro down, the pound got crushed, U.S. bonds tanked, and then got bid into the New Year's Eve close. I found the bid into the close really fascinating because. And then we didn't get the subsequent, and then because of that, we got a bid in the U.S. Treasuries that also put a bid under, put a cap on gilts, put a cap on bunds, and the euro had to be crushed. So clearly, the ECB was in there, breaking bond yields into the close. Now, to speak to Luke's argument about rising bond yields, I just don't think that the world is going to repudiate U.S. bonds under this scenario. Secondary effect of a European crash is everybody's going to rush into the U.S. But they're going to look at, relatively speaking, where they're going to put their assets. The gold market's not big enough. Bitcoin is not big enough. Commodity markets aren't big enough. Come on. No one's going to bid Shell up to $200 a share. Come on. Where's the money going to go? NVIDIA is already, way too big a percentage of U.S. GDP in terms of market cap. So is Apple. The money has to go somewhere. But it is still going to go somewhat into U.S. stocks, and some of it's going to go into U.S. Treasuries. So what you're going to see is the U.S. Treasury market is going to want to sell off, and every time it does, it's going to get a bid. So I fully expect to see the behavior return that we used to see, which is that the central banks will come in who need to refill their coffers as they're trying to. I'm not talking about Europe here. Now I'm talking about the rest of the emerging market world, which, by the way, completely underperformed U.S. markets and even European markets. All the G7 markets outperformed emerging markets, stock markets, in 2024, right? As a proxy for emerging markets, I look at the EEM ETF, the BlackRock Emerging Markets ETF. You look at that, its performance versus the Nikkei, the DAX, the Dow, the Nasdaq, the FTSE 100, whatever. They all outperformed emerging markets. So there was already a rotation out of emerging markets into G7 markets. And then within that, you saw the NASDAQ outperform everything. The Nikkei outperformed everything else other than the NASDAQ because the yen weakened so damn hard, even with the Bank of Japan's intervention. And then after that, it was, the German DAX caught a rally at the end of the year because German bonds were getting killed. Because since Trump's election, German bonds moved from, 10-year moved from 205 to 240. 2.05%, 205 basis points to 240. It's a big move. With the U.S. bond market basically being flat, churning around between 4.5 and 4.65. But I fully expect to see the emerging market central banks, the Asia Pacific, they'll come in and they'll step in on the quarter point. But they'll step in, when the 10-year gets to 4.75, they'll come in and buy, or 5%, they'll come in and buy, and that's going to blunt. And then when those levels get hit, that's when you should be watching to see what happens on those days. Around those days, see what happens then. Does the spread? Does the Bund U.S. Treasury spread tighten and then not widen back out again? Okay, turn the screw another half turn on the noose around Lagarde's next every quarter. And we're going to see there's going to be a lot of those until we finally get a break. Now, we have political minefields that could absolutely, hasten all this. But just even if, let's assume politics is boring in 2025. Like that's a big if, right? Imagine if everything, if status quo is maintained. All right. Trump is bound down, can't really do what he wants. The US keeps spending, Alternative for Germany doesn't block a grand coalition returning to Germany. Keir Starmer isn't thrown out of office in the UK. Emmanuel Macron isn't guillotined, yada, yada, yada. Let's just imagine all of that doesn't happen. Oh, and, Russia continues to run a war of attrition against the West and NATO, and all that just everything stays at a similar level for 2025 politically. All the things that I just laid out, those are all trends that are in motion. And those trends are not going to change. And so these markets are going to break anyway. The only thing that will, and it doesn't matter if it may take until 2026 for them to break, or 2027, doesn't matter. The longer they try to extend and pretend it, the worse the crash is going to be. Mm-hmm. But it's going to happen. And then if there's a political fallout, which I think, I'm a betting man. I'll flip a coin on this. Like, watching the whole Trump crew, like Musk and company, go after Starmer and support AFD, blah, 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 blah. Like, you start realizing that the whole of the Trump transition team is literally saying Europe is our enemy, not China. Notice how China hasn't been in the news. Notice how the Russians ain't been in the news. It's all from those guys. It's all been Europe. I wonder why. Because they realize that they're the ones that rigged the elections, not China, not Russia. They're the ones that were creating policy for us, that was destroying us. They're the ones that were getting the advantages, the advantage of being they expected to continue to be subsidized in their perfidy, and they expected to drain what was left of our capital and then run it back to Europe, then collapse everything, steal all the money, stip all the bondholders, and then reissue the currency, because they've set the board up for themselves to their advantage, where nobody has any choice but to invest with them, which is what they were trying to do. They were literally trying to steal everybody's wealth and then go, well, you don't have any other alternative. You got to go to us. And the way I started likening this was like a company. Company's in financial trouble. Products aren't any good anymore. They've overinvested in a product line that tanked in the market. They've made a lot of strategically bad bets. Mm-hmm. They get to a point where, all right, well, it's either we cram down the existing bondholders and shareholders and try to, and then right the ship, new leadership, a new business model, whatever, and then let's get to that point so that we can issue new debt and issue new stock and recapitalize the company. That's what Europe's trying to do at our expense, at China's expense, at Russia's expense, at Israel's, at everybody's expense. Israel, the Middle East, everybody's. They're trying to do this to everybody while still maintaining institutional and regulatory control over the global capital markets. And everybody's wise to it. Chinese are wise to it. We're wise to it. The Russians are certainly wise to it. And it all is downstream of, going back to what we talked about, the original inciting incident at the beginning of this podcast, all set up in Trump's first term. Because now because of SOFR, one, and then the American people saying enough is enough, and then giving Trump a second term to come in with a different crew, with a different generational affect, and kick the boomers out and their utopian fantasies, and bring in a bunch of hard-bitten Gen X style warriors who are going to go in and start cleaving stuff. And that's, I think, where we are, Tom.
Well, earlier you said that basically there's going to be this push towards getting tangible assets. And that made me really think and consider how China and Russia has behaved, let's say, over the last 5 years, over the last 10 years. They're
Sure.
much more long-term thinking of actually developing their abilities and supply chains to be able to actually not only produce hard items, but also refine them and be the main hub for a lot of these things. So,
Sure.
It's interesting how it ends up kind of pointing back, like what's the saying of, if you point at somebody, you have 4 fingers or 3 fingers pointing back at you. It ends up kind of completely reflecting and backfiring on them.
Mm-hmm. Yeah, no, it's a good point. Look, it's not like China and Russia don't have their problems, right? I'm not, and they do. And a competent United States that's acting in its own best interest is something that a lot of them, and most of the world doesn't understand. We've all lived in a world for the last 70 years with having a United States that wasn't acting in its own best interest. But, and I mean by building an empire, but it's not even a fully formed empire. This is the problem I have with so much of this argument. And I'm not saying, again, I'm not trying to whitewash anything here. We have a lot of sins we need to expiate, and we have a lot of work that has to be done internally to fix a lot of what's happened. I'm not saying we weren't willing partners in the last gasp extension of the old European colonial empire, which is the one that's actually failing, right? The Russians and the Chinese have that kind of view of history between East and West. We Americans don't really, okay? And that's both to our advantage and our disadvantage. Our disadvantage is that, to us, history started in 1776, right? And to our advantage, history started in 1776 because we don't see ourselves as, those people. We see ourselves, the core of American culture, which they're trying to destroy, is a dissident European culture that came over here to get away from the sclerotic culture of colonialist culture of Europe in that era, and multiple waves of that emigration out of Europe and into the United States, and out of Asia, and out of Russia, and certainly out of India and the Middle East. The whole world has done this at multiple times in waves over the last 250 years to America's benefit, right? And people came in here, they eventually became Americans, and America now is the thing. But the ethos of America was always as the dissident, right? It's not really an imperial thing that's built on 1,000 years worth of, effectively manifest destiny. We adopted some of that and how we dealt with the Native Americans in a very English way or in a very French way. And I'm not saying that we're blameless here. No, we have plenty of skeletons in our closet about this stuff. And we have a lot of things that, we should be looking at and going, yeah, we need to not do that anymore. Right. But I think that that's fundamentally at the core. I think that's still fundamentally at the core of the American value system, which is that our government, that we can make mistakes, then we can change our government because the government works for us as opposed to us being the government. And I think that fundamental idea embedded in the American psyche, I think, is the thing that they have to destroy that more than anything else, old Europe. And that's ideologically or psychologically or however you want to put it, is the thing that's really playing itself out. And it's the abused child syndrome. And America still has a lot of abused child psychology, I think, embedded in the way we prosecute our foreign and domestic policy and everything else, and the way we view other people and the way we view foreign relations and all of it. So, but what we have now is the first generation since World War II, or even before that, over the last 100 years, that understands this, I think, at a visceral level, and is like, okay, we're ready to like, okay, that was a bad idea. Let's stop that. Let's stop doing that. Let's move on. Let's go back to, quote unquote, what made America great originally, which is what the whole world wants us to be anyway.
Mhm.
You know, I'm not saying, forgive and forget, folks, but, hopefully forgive, but never forget, and keep, hold our feet to the fire. So, but at the same time, never forget that the old empire never ended. It's still going on. There are still plenty of forces within British and European power centers that have agency and power. They have old relationships. They have old money. They've got, trillions in capital, blah, 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 blah. And they're going to use that stuff. And so maybe a better way, we were talking, I think I talked about this the other day. You being a patron is hard because I know you may have heard some of this stuff before. So it's interesting, but that as opposed to viewing America as an empire, which is the way, my colleagues like Pepe Escobar and others want to present to the world. And I used to think this way. And part of my thinking is still there. I think that America should be anti-imperial in all of our dealings, right? I'm not saying that we should. I'm saying as an analytic tool, just analyzing things from the standpoint of, well, America is the empire, therefore empires either have to expand or they have to die, right? So that's an argument for why Trump is going after Canada and Greenland and the Panama Canal and yada, yada, yada. And that's nice. It's cute, but I don't buy it. What if the bigger thing here is that old Europe is failing and the forces of history and the consciousness of America, Middle East, Russia, China, Central Asia, and the rest are all like, you know what? I'm done with you people. This is over. And your empire is going to collapse. And so as your empire finally recedes completely back to the borders of old Europe, well, nature abhors a vacuum. All Trump's doing is filling that space and trying to accelerate it happening. And maybe that's the better way of looking at it. Same thing with China's moves into Africa or across Asia or whatnot. To, again, it's not as same thing with Russia. Is Russia really trying to reconstitute the Soviet Union as Europe keeps trying to tell us, and the neocons in America keep trying to tell us? Or are they just trying to secure their borders to be Russia? And knowing full well that they have hostile actors on their borders. And that once the hostile actors stop being hostile, all of this will end. Let's trade some gas for, cheese and wine and, cars and aluminum and titanium and all the rest of it. And wouldn't that be great? Which is all Putin's been offering for the last 22 years. And they keep slapping his hand away. So, the important thing I'm trying to get across here is not that America isn't an empire. That's not what I'm saying. What I'm saying is you do yourself a favor to look at everybody's circumstance from how much of an empire they still see themselves as. And then maybe you reframe everything, not necessarily in one modality of America's the villain, they're the heroes, they're the victims. Play the hero, villain, victim triangle out from different facets, and you'll see different things, because that's what history actually is. Mm-hmm. And the older I get, the more I get taught that. And I get taught that almost every day by Dexter White. I have to always give him a shout out to this one because he's so good at it. Sometimes a little too good, but that's just my personal opinion. So that's where he and I fight behind the scenes or during a podcast, like we just, published the other about an hour ago. So we'll see.
So Tom, you mentioned the idea of being able to change our government as Americans. Mm-hmm. What do you think of the possible success of the DOGE agency? Like, I've heard very differing opinions on its ineffectiveness or, complete game-changing ability to actually cut costs. So where do you fall on that spectrum, let's say?
I'm very much if you think you can do it kind of guy. And I've been saying for a long time now that we can cut $2 trillion from the budget tomorrow. Mm-hmm. It's easy. All we got to do is stop spending money overseas on shit we don't need. And that I don't care about nominal GDP. I never have. I never will. I think nominal GDP is a dumb statistic. I think it's part of a paradigm of false economics and a false economic model that we then use because we don't have a better model. Mm-hmm. So we fall back on these imperfect tools to justify our deeply held beliefs about how things operate economically. I'm not a big fan of that. I'm the guy sitting there. I'm the guy sitting there in the laboratory going, "Wow, that's a really interesting argument. You forgot this, this, and this. Now go rewrite your hypothesis. Then you'll get the money to start your experiment." Mm-hmm. Sorry, I'm not going with that because those are all wrong, right? So GDP, unemployment, all this stuff. These are all reflections of bad policy. They're all reflections of malinvestment and all the rest of it. And they don't mean anything. They're just gross figures of spending. Who cares? Yeah, you might be validated somewhat in your argument that it'll have 30% predictive power. Sorry, anything less than 55% isn't an actionable thesis because I can flip a coin and get 50%. So if it's 30% predictive, it's less than a coin flip. So it's really useless, right? So the way I look at it is really simple. Again, go back to what I was talking about earlier about domestic dollars versus euro dollars. We can crash the euro dollar system. Other currencies can fill into that space. We have plenty of consumption here in the United States. What we don't do is we don't produce through complete supply chains all the things that we need to produce to consume those things. Mm-hmm. We've outsourced, whole swaths of the supply chains. I mean, we produce a lot in the United States. We just don't assemble. Like iPhones are made in the United States, folks. They're assembled in China. Forget these things, right? So, like most of an iPhone is made in the United States. Only a part of it is made somewhere else, and it's assembled in China because it's cheaper, right? As a point of distribution globally for Apple. But so as far as I'm concerned, do we need to spend $2 trillion a year maintaining an empire on 800 bases and all the rest of the stuff? No. Those guys can come home. Those bases can be closed. That stuff can be sold off. That military equipment, those buildings, that real estate, all that can all be sold off. Yeah, we'll take a pass on it. But, giving it away to the Taliban to go attack, Pakistan with this week, that was kind of dumb. Was it part of the plan? Of course it was part of the plan. But, is that going to affect American domestic spending? No. That's money we're printing and sending overseas to maintain shit we don't need. Mm-hmm. So maybe, but the only thing that's part of as I've said before, but the only part of that GDP that domestically circulates is the SG&A costs on that. That's it. What is that, 7%? It's $140 billion. We fart $140 billion. Like, it's nothing. Let the price of gold go up by $200. Okay, we printed the $240 billion in reserves. Like, we're done. It's not hard. So, like, I don't even understand it. So that the SG&A costs. What is that? Okay, let's call it $140 billion. Let's put those people on the dole for 2 years. Let's freeze now and amber their future liabilities to the United States government. I don't know what it is. It doesn't matter. You can cut $2 trillion worth of spending to the foreign part of it, which will crash foreign markets. Fine. It's not my problem. That is not my problem. The Chinese are trying to fill into that gap by issuing US dollar denominated yuan payable bonds in order to help their trading partners navigate what was clearly coming. They wouldn't be issuing those bonds if they didn't expect DOGE et al. In the Trump administration to cut spending. If they didn't have good, accurate intelligence about this, they know it's coming. And they're starting the process now, and they're going to fill in with hundreds of billions of dollars worth of these bonds. Okay, good. China should be out there supporting Thailand's economy directly, not through the United States proxy and through currency exchange and and using both the British pound through the City of London and the Singapore dollar and like no, like let them figure it out. That's not my job. We don't need that business. Our GDP could shrink by 10% in nominal terms. And our future liabilities could drop by another 10%. And the entire economy would run better because we wouldn't be running a 7% to GDP budget deficit. Now, all of a sudden, everybody's not talking about that anymore. Now what? Oh, maybe we can cut taxes. Maybe we can cut regulation. Maybe we can, I don't know, we can stop, we can refocus our healthcare industry on providing care as opposed to billing. How about we get the car companies building cars people want to buy? Yeah, all these arguments are so specious. They're all lost in a very first order fugue based on the normative, or not normative. That's the wrong word. Their own normalcy bias. Of this is the way things have always worked. This is the way we set monetary policy. This is the way we do things. So therefore, this is the way it's going to work. New sheriff in town. I'm not going to do that. And I don't think so I'm just not buying it, Tom. I think we can easily cut $2 trillion from the budget and shock everyone. And I'm not just talking about what Elon did with Twitter. I mean, that's the story that everybody talks about. Understand that a lot of what Elon did at Twitter, and Dexter White can speak to this with more expertise than I can. He's actually has spoken to me about it in more detail. Elon threw the baby out with the bathwater. He threw out good coders because they weren't coding very much or whatever. I mean, he didn't do it across the board. It wasn't a good thing that all those people that he got rid of were the right thing. Get rid of the purple air tumbleerinas. Yeah, some of the developers. Just because you write fewer lines of code doesn't mean you're not a good coder. Like that's actually the exact opposite. Guys who write efficient code, right, tend to write better code, right? So if you can do more with less lines of code, that's generally better. Little I remember about programming from when I was a kid. So, but that doesn't mean that but the basic framework is absolutely correct. There's plenty to cut that will get rid of will uncover unbelievable amounts of sloth and waste and everything else. And look, if we have to take the bullet and put these people on a 2-year severance package, but then freeze their salary and their future liabilities to the United States government in amber, meaning they're not going to be rising by their cost of living increase and or their bonus every year, and them staying in their shitty job that they're not doing anything well past their 20 in order to retire at 35 years when they're 60. You know what I mean? Like there's a lot of people in government positions. I know I could have easily been one of these people. When I first went to work for the University of Florida, I was 32 years old. I could have stayed there until I was 65. I only had to retire after 20, but I could have been there until I'm 35. Until I had 35 years in. You know what my pension would have looked like at 35 years? As opposed to 20? That's when all the money, that's when the real accrual rate on all these pensions really, that's when everything really starts to spiral. It's like your whole life policy, right? Your whole life policy, really starts to take off after the termination date, after you turn 65. Then it really starts to rise and you stop paying into it. So it's the same thing about the unfunded liabilities. A lot of those people are massive liabilities in that respect. You cut them off now and say, no, sorry, you have to fend for your own health insurance for the next 15 years. And then when you're 65, you go on Medicare. Well, that's different. That's a fundamentally different path. Okay. Than where we're on now. So.
There's one thing that I'd like to just ask you about or get your opinion on before we move or keep moving in that direction that we were just on, is this idea of, let's just take Canada and Australia for an example, right? Sure. These are commodity producing nations whose currencies aren't, let's say, necessarily doing all that well. Do you think that, this ends up changing with let's say an administration that comes in that is more favorable to producing these commodities? Or is this, a set path because of the policies that have been enacted over the last, let's say, decade?
Oh, I mean, it's like everything else. You just saw the entirety of Wall Street get out of the net zero alliance like this week. Same thing can happen in the oil and gas industry. You can like the interestingly, when you think about like this, I don't know much about Australia other than that it was clearly, obviously, the test case for how they were going to lock down the world, what it was going to look like to lock down the world. So they used Australia as the test case because the English love to destroy their colonies, treat their colonials the way they do. I don't know if you've seen Gallipoli, So, but Canada is interesting, right? Because let's go back to that situation with Justin Trudeau and the budget and Chrystia Freeland and all that. And then his response, Trudeau's response in the middle of that fight was to butter up to Trump, was to bend the knee to survive. So,
or to survive, or to just try to save public face.
He was on his way out the door. His lieutenant was gunning for him to crash the government and have her take over. That's what Freeland was doing. That's the only thing that makes any sense whatsoever. So what she was doing was trying to hold Canada for Davos or for Klaus Schwab or whomever. And get rid of Trudeau at the same time. And by doing that, what would that do? As hated as she is, she ain't hated 1/10 as much as Justin Trudeau is. So that's a classic escape valve, pressure release valve moment. Get rid of Trudeau, everybody cheers, meet the new boss, worse than the old boss. The real power behind the throne now takes the throne. Right? It would have been even worse. So, no, I think Trudeau is smart enough to know. He ain't very smart, but he's smart enough to know. No, I had to go bend the knee and go and ask Don Trumplione for protection. And Don Trumplione said, sure, it's going to cost you X. Mm-hmm. But then, because one of the things about Trump, and I think this is really important, Trump understands as a deal maker that his word has to be gold. He cannot go back on his promises, in effect, especially in dealing in foreign policy, dealing with foreign leaders. He makes a threat, he's got to follow through on it, or if he makes a deal, he has to honor it. Okay, even if he winds up with a deal he's not all that crazy about, because he understands that if you want to get a big project like building buildings done in hostile environments like New York and Atlantic City and other places, Las Vegas and others, well, then you have to be as good as your word. You may even have to, I don't know, how to deal with unsavory people. I know. I'm sorry, Stephen King, but that's just the way it fucking works. It's, time for everybody to put their big boy pants on. So for Canada and for Australia, the future could be very bright for them. Pierre Poilievre is going to probably take power. He's going to come in with a mandate like Trump did to change things radically. You got Danielle Smith out in Alberta. You've got, things are changing across the Western Canadian provinces where all the oil and gas are, that's where most of it is, right? So do you again, go back to what Trump said earlier. You go back to what you said earlier about what Trump wanting a weaker dollar. Well, a stronger Canadian dollar, a stronger Australian dollar, a stronger commodity-based currency system, or regime where the commodity currencies, the classic commodity currencies, the Canadian dollar, the Aussie, the ruble, blah, 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 they're strengthened. That's going to offset the U.S., the strength of the U.S. dollar and other venues somewhat. It's going to moderate it. So Not, I mean, from the US dollar index perspective, no, obviously. But the US dollar index is absolutely antiquated. It's pretty much the pound, the euro, and the yen, right? So the rest of it doesn't really matter. Like Chinese yuan isn't even in it. It's just dumb. So, whenever we make an argument about a strong dollar and we use the dollar index, again, it's like GDP. When you use the dollar index as your means for argument, there's a limit to that argument you can make. It's specifically about, America's traditional great trading partners, Europe, the UK, and Japan. It's not a general argument about dollars. Mm-hmm. So I think their future could be bright, depending on how they play their cards. So,
when we think about the spending and let's say the policies that are being put forth by Trump, how does that or what effect is that going to have on inflation? And how does the oil picture, the oil and gas picture of drill baby drill and also OPEC's production targets, how does that play into kind of balancing the scale of inflation?
Well, I think we're headed for another round of inflation. And it's going to be a commodity cost push inflation round 2. I don't think that we have gotten rid of all of the inflation that was created during COVID. I just think it's not possible, because if it were, Powell would still be at 5.5%, right? At a minimum. I mean, but I don't even think interest rates are all the are that. I think that, and again, I'm going to bracket no war. I'm going to bracket low level or high level simmer on war with Russia and war with Iran. Some of what Trump is going to do is going to be inflationary, and some of it is going to be deflationary. You cut regulations, you cut spending. That is a deflationary or disinflationary impulse, right? You encourage savings. That's a disinflationary impulse in the short term. In the long term, it isn't. But at the same time, Powell has to cut rates in order to keep the credit markets and keep the commercial real estate markets, which are gasping, from rolling over. So you kind of have to play this game of keeping asset prices high and then just kind of riding out another wave of inflation by keeping asset prices up. And I know that, and you can grind it out, and that's in real terms. This is where Dave Collum and I have gone back and forth, multiple podcasts, kind of disagreeing about this, but we're really talking about different time frames. I'm talking about getting through like the nitty gritty on this year, then next year, then the year after that. And Dave's thinking in the generational sense. And that's fine. So when you think of it that way, Powell's going to have to invite another round of inflation. He can't get around it. He's cutting rates, and inflation is still not nominally above 2%, which of course he's getting imbased for. Of course, if he didn't cut interest rates, then they'd be screaming about the labor market. Like, damned if you do, damned if you don't. Like it doesn't matter. No matter what the Fed does, it's wrong, because everybody wants the Fed to be wrong, because they all want to be right. Because the Fed being incompetent is now like the new black, as it were. So, and as far as I'm concerned, that's a narrative. It's not wrong. It's got kernels of truth to it, but it's not wholly explanatory. So we are going to be looking at another round of inflation. I think oil is criminally underpriced. Given the impediments to energy moving around the world that have been put in place and have to be undone, right? We've had massive intervention into the oil distribution channel, oil and gas distribution channels, and it hasn't shown up in the rising price. And that's simply because we've been pushing the price of oil down through financial shenanigans, i.e., releasing all the oil from the SPR, reweighting the Brent crude contract with WTI in it, yada, yada, yada. So, and then just the fact that the Brent crude contract, for the most part, is a dollar settled contract. It's not really a physically settled contract. And I to be honest with you, I didn't even realize that. I didn't even know that was the case until I sat down and talked with Tracy Schuchart, and she reminded me of this. I'm like, oh yeah, you're right. So knowing that, like the Brent crude price in and of itself is a bad proxy for the price of oil, right? Because it's not even a physically settled market for all intents and purposes. And to be honest, I haven't been looking at the numbers coming out of Shanghai to see what's going on over there. I know that those are all physically settled futures markets, gold, oil, all of it, right? So, yeah, I don't know. But oil is criminally undervalued at these levels. In order to keep asset prices from falling too far too fast, the asset prices whose value is predicated on oil being the flow of oil being the collateral for and the proxy for economic activity in nominal terms, then the nominal price of oil probably has to go to $90 a barrel. I'm just like throwing a number off the top of my head. This is not based on math. This is based on intuition, based on mostly the chart. And so increase the price of oil by 15 to 20%, and you allow for that. You allow yourself to stave off the deflation that would occur in other areas of the market. The big thing is getting crack spreads down and getting the price of the oil at the pump down. And I firmly believe that the best way to do that in the United States quickly is to scrap the ethanol blending credit system, which I've bitched about many, many times. What's known as the Renewable Identification Number System, RINS, RINS, which is a tax for all intents and purposes that refiners have to pay to buy the ethanol necessary that they have to blend into their gasoline. And if they don't buy enough relative to the amount of gasoline that they refine, then they've got to buy these credits, which they can then sell to somebody else, and blah blah blah. And it's just again another one of these really dumb, overly complicated systems that are designed to allow the government to come in and mutz with the price of the most important commodity in an economy based on cars, which is the price of gasoline, right? So, they understand that the price of gasoline is the marginal driver of economic activity, and, raise the price of gas by 50 cents a gallon, and all of a sudden the American economy just wants to slow down. So scrap RINs, which are currently trading about 65 cents a gallon, completely, just scrap it. Get rid of it. It'll take an act of Congress, so it's not going to happen until after the midterms. But it's one of those things that if you really wanted to, kickstart the American economy and offset some of the quote unquote inflation that's incipient, price inflation, well, scrap the price of gasoline by 65 cents a gallon across the country, then and blend and then allow them to just sell us gasoline, right? So that marine grade gas is not $4.50 a gallon when 9010 87 octane gas or regular unleaded is $3. Like, in order to cut my grass, the guy's got to buy gas to keep a small engine from getting destroyed. Got to pay $4.50 a gallon to run his lawnmower and his weed whackers and his chainsaws. When that guy's only paying $3.20, when everybody's paying $3.25 a gallon instead, or he's paying, whatever, everybody's paying $2.75 a gallon. You cut the RINs, maybe the price of gasoline drops by 25 to 30 cents overall because of the, refining capacities, everything else. Let's just assume that even if the price of gasoline only drops 20 cents, it's still a net win. But now all of a sudden, we're not subsidizing the corn industry. Now all of a sudden, farmers can, produce the right industrial crops, or the right food crops, or the right this crop, because corn is an industrial crop at this point because of the ethanol blending thing, but it's got other uses as well. So why are we diverting, corn production into gasoline production in 2024? It's dumb. When we've got frackers going out of business because they can't, they can't make any money at $65 a barrel. It's all dumb. So, and we've got Alberta sitting on, tons and tons of oil, and they'd like to sell it to us, and they can't because of a regulatory scheme to keep the price of oil at a particular level, and in order to destroy our desire to drive cars. And again, Europe thinks it can. This is a European project. I keep going over this because Europe doesn't need cars. Europe is small. You don't need there's not nearly the need. And the Europeans listening to my voice need to get this through their heads. They need to come to America, and they need to fly into Gainesville, Florida, and then drive to New Orleans. Okay. You'll cross 2 states or 3 states, and it's 600 miles, and it's like, what, 550 miles? Like, it's insane. And then when you're done with New Orleans, I think you should go and like drive to Boise, Idaho. And when you're done with that, maybe go visit people and your friends in Calgary and realize that this is big and there's nothing out there. And America is huge and Canada is huge. And you're not going to do that in electric cars. There's not the infrastructure necessary to put up the charging stations to get people across the country. It's a non-starter. So clearly, the push for EVs is a thing to push the American economy into retrograde at the expense of the European economy, because EVs make more sense in Europe. They don't make sense in America at all. Maybe in the Eastern Seaboard. In Miami, Los Angeles.
If you live in a city and don't really go anywhere outside of the city, it's reasonable. And it just doesn't seem like, as you say, without the infrastructure, it just doesn't work.
It doesn't work. And it can't, and the amount of money and the amount of copper it would take to make that work, and then put the copper in the ground and the maintenance and the this and the that and the vandalism. And I mean, dude, to build it out, it'll send copper to $12 a pound. Mm-hmm. And as you're laying the shit as you're laying the double lock cable in the ground to put the charging station up, there's going to be 5 guys coming behind you, digging it up out of the ground, urban mining, and selling it on the open market. Mm-hmm. Or have you not heard of, people stealing the coils out of air conditioners on the tops of buildings? Every time copper gets above $5 a pound, the phrase urban mining comes back into the lexicon. Mm-hmm. So it's these are people who these policies have been created by people who live in their heads, who don't actually live and work in the real world, who've never met a pipe, no less welded one. And I know, and I say that knowing who I talk to. Like, sake that they didn't smoke something out of, to be honest with you. Like, it's just stupid. So can we just stop with the lying? Can we just stop with the nonsense? Like, it's just all dumb. And that's why, we're going to push away from that stuff. We've got all this engineering, all this expertise, all this R&D, all these depreciated assets and these great engine technologies. Why throw away the internal combustion engine after 120 years worth of unbelievable levels of engineering prowess that have been put into them to make them as thermally efficient from a Carnot engine perspective as possible? Like, it doesn't make any sense. It's just stupid. It's wasteful. And it's offensive. And I don't even believe in the concept of offense, but there it is. That's how bad it is. Mm-hmm. You got me to use the word offensive.
Tom, I want to go back to an idea that I heard you put forth at one point, and that was the differences between, let's say, Powell's path forward here for the next 4 years under a Trump presidency versus a Kamala win. Like, what would the differences have been in his actions going forth from there?
There's differences in actions. We still be at 5%. He would say, "Look, you're not going to quote unquote, you're not going to close the fucking door. Like, you're not going to close the door on insane spending. I'm not going to make it cheap on you. You want to go to war over Ukraine, over Ukrainian shithole? Fine, 5%. If Harris had won the election, yeah, we'd easily still be at 5%. Powell would use every report imaginable to his advantage to say, you know what, inflation hasn't been moderated yet. I got to keep interest rates high. Mm-hmm. That's what you do. It's not rocket science, folks. Like, and I said before the election, it makes sense that if he's on board, if Powell is, if I'm right, if the thesis is correct, if I'm right, then Powell will cut harder under Trump than he will under Harris, not because he's afraid of losing his job. It's because it's the right thing to do, given that that Trump wants to come in, slash spending, slash regulations, engage in all this disinflationary behavior. You've got to have something else on the other side of it. Otherwise, you are going to have a crash in asset prices, and nobody wants that. So, you can't crash out the boomers and their home buys. It's the only equity they have. Like, so what we have to do is change the dynamics on how dollars are utilized and keep the same flow of dollars around. And that's the needle. And I'm not sure that, we can hit that, we can thread that needle, but, at least have the plan that we're going to attempt to, as opposed to just saying, you know what? Nope, we got a rope and we're going to go over there with it. And they have to hell with that needle thing. Like, we're just going to do the rope thing. We're just going to go pull on the world and make it do what we want. Like, okay, boomer, that's nice. Have fun being poor, because it's going to get really poor. Then I'd be like, if that were the case, I'd be so long Bitcoin, it would be insane. I'd be so long. I'm already so long both gold and Bitcoin, but I would stop spending every discretionary dollar I have, and I would be plowing it into those assets. As of right now, I'm like, nope, I get to live normally. I get to live like a human being. Mm-hmm. I get to still buy cigars and stuff. Like, otherwise, I'm dead serious. I would literally shut down all of my spending. And I go read every book in my library for the next 3 years in order to, not spend any money. Maybe I'd still play World of Warcraft or whatever. No, I'd probably just switch back to Guild Wars 2 and not even give ArenaNet any money, just play for free. Like, that's serious. Like, I would spend no money whatsoever.
As we're thinking about things to cut out of the US's budget, Tom, do you think that Trump is going to, maybe going to is the wrong word, but what interests does Trump have in ending NATO? And does that end up being a net positive for the world?
Oh, yeah. No, it's absolutely something that he needs to do. So, look, Europe wants out of NATO. They want their own security architecture. They want Germany and France they want to, like, part of this whole, hey, let's crash Europe and then rebuild. It's so that Germany and France can become the military industrial complex of Europe. They want to replace the United States. They don't want to buy our stuff anymore. Fine. I'm okay with that. We don't need NATO. We don't need to be a part of it. Okay. Maybe there's still a need for NATO in some form or another, but not the way it's currently constituted. And I think that Trump coming out the other day and saying, "Oh no, you got to spend 5% of your GDP on defense." That's his way of saying, "I want out of NATO." Mm. I mean, that's clearly what that is, right? So,
what's the number supposed to be now? 3, right?
So 2. It's like 2% or 2. He was shaking them down for 3. Now he's pushing it to 5. Like, with 5%, none of them can afford it. Not one country.
Maybe that's just a tactic to put 5 out there, and then he'll settle for 3.5, 4.
There's that as well. I mean, that's a typical Trump thing. That's a good point, Tom. But clearly to me, that just screams, we don't need to be in NATO anymore. This is no longer serves our best interest. Doesn't serve anybody else's purpose. And again, Marco Rubio as Secretary of State is clearly a statement saying, look, we want to end our obsession with the Middle East and Russia and China and everything else. We want to, refocus our foreign policy on North America, which is another way of saying, hey, oh, by the way, we're going to give up the empire. I'm trying to move so that the sun's not killing this thing as we go into the late afternoon. It's 3:30 over here. So yeah, like, there it is. I mean, that's what I'm seeing, and that's what makes most sense to me. And it's hard for a lot of I get why it's hard for some people, analysts, commentators, patrons, people I interact with on Twitter. I get why it's hard for people to interpret these events differently, because we've been imprinted to see them in a particular way. And they've always worked this way, so they should always work in the future, right? But I always talk about Malthus, Thomas Malthus and Malthusian style thinking as a real detriment. If I can do one thing before I die in this life, is to explain to everybody that no matter what happens, whenever you start engaging in Malthusian thinking, you've lost the plot in any way, manner, shape, or form, because no system continues. No matter what, no human behavior stays on a path forever without, encountering the law of diminishing marginal utility, where at some point that behavior no longer is, worth pursuing, because there's no marginal ROI in it. There's no marginal return on investment in it. And eventually, So when there's high ROI, you see people move into it, but then eventually the ROI starts to taper off, and then you start to look for other ways to get that same ROI, and then your behavior shifts. And so, clearly there's no real ROI anymore. This is my argument about SOFR and the Fed and everything else. There was no more ROI for the U.S. banks to be a part of the whole globalist cabal if they were just going to get replaced by, the member central banks of the European Union, and we didn't need commercial banks anymore. So it's the same argument. So I was arguing with Steve St. Angelo on Twitter, not one of my favorite people, about peak oil. And I know Steve's a big peak oil guy, and I'm not, and he's very Malthusian in this thinking, and that's fine. But he brought up the whole idea of, well, conventional oil. It's a typical talking point of his and many other people, that conventional oil production has been capped for the last 25 years or however long it's been. And that there's been a rise of natural gas liquids and other things that have helped keep the numbers up. The total production of a barrel of oil equivalent rising at 1.5% to 2% a year. And it's a fair initial point to make about to support, oil, the peak oil. Well, if conventional oil has been capped, or if conventional oil production has been flat in a free market, that would absolutely, I would absolutely agree with that conclusion, right? That we can't really find any more conventional oil at that price, at current pricing. We need to go up in terms of real prices. But we don't have a free market in oil. We don't at all. We have governments out there every day trying to retard our ability to do oil investment into oil. And the policy framework around oil production, oil and gas production, is bounded by politics, is bounded by geopolitics and public policy and all of this stuff. And therefore, at a certain point, the oil and gas majors realize that they respond politically to what's happening. They're better barometers of the political winds than any other industry out there, because they are the industry that creates the world, right? That powers the world. And I've always said that, for example, one of my favorite companies always is Shell, at least up until recently, Ben Van Beurden was running Shell. I'm like, that guy always seemed to be 18 months to 2 years ahead of the political curve. He knew what was going to happen next and shifted Shell's strategy 18 months to 2 years ahead of and I would just watch what Shell was going to do, and then I would understand where the industry was going to go. Changing now, I don't have a good feel for the new CEO. If he's cut from the same cloth as Van Beurden, well, then Shell is still a great barometer for this. So I just don't believe that we have a free market in oil. So we don't know what that looks like. So the peak oil argument, the Malthusian argument about how eventually we're going to run out of conventional oil, is specious. It's based on a faulty premise. It may be true, but you don't have a good argument for it yet. If that's your argument, come up with a better argument, and maybe I'll be convinced. But as of right now, I just don't buy it. So I default back to a typical thing of, don't believe that just because it's always worked this way, it's going to continue to work that way in the future. It doesn't matter what we're talking about. It doesn't matter if we're talking about monetary policy, or we're talking about oil production, or we're talking about anything. The only thing you can count on is that humans will respond to incentives, and those incentives are always going to change to the negative the more of a particular object or resource that they acquire. The law of diminishing marginal utility. Keep that in mind, and everything else becomes really, really easy to start the handicap. You might not get everything right, but you're going to be right more often. You're going to be on the right path more often than you're wrong. You still might want to be wrong. We're all wrong all the time. But that framework hasn't failed me yet, and it's not going to, because I think it's just a fundamental aspect of human nature. Mm-hmm. And so if you don't believe in the law of diminishing marginal utility, well, then you're a Marxist. And you may not even realize you're a Marxist, because Marxists don't believe in this. They believe in fairy tales. Mm-hmm. And I'm harsh with my criticism of people politically, it's because of this, because this is a break point. It's a very simple thing, but it's a dividing line. And again, it's not personal. Look, I'm when I engage in that thinking, I get whacked upside the head all the time. So, and I don't do it often. I try not to do it, but every once in a while and sometimes like, for example, let me give you a perfect example of where I was probably wrong, but the last couple of weeks worth of dust up, maybe I may wind up being right. Like when Vivek Ramaswamy first hit the stage, I just responded knee jerk without even listening to him speak. Like, oh, look, they're going to throw another Indian at us to replace us with, because I saw that whole thing happening with ethnic Indians being put in positions of power all across the G7, right? And I went, yeah, who's this guy? Comes out of nowhere, and all of a sudden, I now have to believe that he's real, not Memorex. Okay, yeah, whatever. And I started calling him H-1B Obama. Turns out that I was most likely wrong about this. I think Vivek is far more what he actually purports to be, and some of that I don't agree with, like his attitude towards the H-1B program, for example. So you know what I mean? But that doesn't make him a globalist stooge. It doesn't make him a product of the City of London or anything along those lines, which is what I would originally have thought he was. So I was completely wrong, but that's the way I was seeing things, and I took it too far. So then I issued an apology, and we move on. But we should all be willing to at least be wrong in public, where our lives don't depend on being right about every prognostication we make. If that was the basis for any of us to get listened to in this marketplace, nobody would be talking. There would be nothing to say. We all had invalidated ourselves at some point in the past, right? So,
one of the other interesting ideas that I did an interview all about, obviously, and that you guys discussed, and I don't think you and I have really discussed, is this idea that Judy Shelton put forward about putting gold out on the yield curve. So how do you see this as being, maybe it's not beneficial, but beneficial or not to the government funding itself, and how would it actually work?
Okay. The first time I heard about Shelton's idea, it hit me like a bolt of lightning, because that was one of the moments when I went, oh, we have a path out. Like, up until that point of our fiscal nightmare, up until that point, I could argue there's got to be a way out of this. That was literally the way I would put it. Like, well, there's got to be a way out of this. There's a way to skin every cat. We've got plenty of capital. And then somebody forwarded me one of Shelton's original article on this from Cato, from like 2010. I think it was Ellen Brown, as a matter of fact, actually, forwarded to me, because she was I still think Ellen's a patron. So she popped it into our private server one day. I read it, and it would just hit me like a ton of bricks, right? A couple weeks later, actually, we did talk about this originally, because we were on your spaces with Vince Lanci when first time I ever met Vince. And I brought this idea up because Vince was going off on doing his thing, and about how we were screwed. And then I threw out the idea of the gold-backed treasury bond, I just said, hey, what about a 5% gold cover clause, going back to the old Jim Sinclair argument from 20 years ago. And at that point, you remember, I don't know if you remember, but Vince was like, he just stopped dead in his tracks. He was like, oh my God. And that's when it was like, at that moment, Vince and I became friends. Like, and I mean, it was beautiful. And thank you for introducing me to Vince, because it's been a great relationship since then. And I absolutely look to Vince for guidance all the time. He's a brilliant guy.
As do I.
And what's that?
As do I.
Yeah, no, I adore Vince, and he's constantly challenging me in ways that I really appreciate. And so, matter of fact, I need to reach out. I haven't spoken to Vince in about a month now. I need to reach out to him. Vince, if you're listening, dude, no offense, I'll get back to you. So we brought this idea. So I think it's a brilliant idea. And now I know what Judy's put forth, and I know you had her on your show recently, and I watched that episode, and it was great. And I thought she was brilliant. And then right after that, actually, her publicist reached out to me and sent me a copy of her book, and I haven't reached out to get her scheduled to my podcast. I really need to do this. I really need to get this done. But just, schedules, life, everything else. So I know what she put out was that, hey, just put out a gold back tips. 100% backed by gold. It'll act like a treasury inflation protected instrument. It's a brilliant idea, because this way now the government can sell debt without actually having to pay out dollars to service that debt while we fix the fiscal nightmare. And you're effectively recapitalizing the country that way. All I've been saying since I first heard about this idea was, hey, it can take whatever form it needs to take. It can be a hybrid instrument where it pays a certain amount of dollars as a regular coupon, but then it also has the promise of gold at the back end, and you can create an instrument that the market will appreciate. However much gold backing that instrument needs to have in order to get this done. But what it does is it remonetizes gold, makes it a beneficial asset that's not productive on the balance sheet to allow the price of gold to, in real terms, in terms of the people who invest in the country, have a stake in the game and have a skin in the game. And that's the part that I think, I haven't even thought about or presented on this issue in all the times that I've put it out there. One of the things that does is it democratizes, in theory, it democratizes the gold reserves of the country into the hands of the people who should benefit from it. I don't think that I will say this, and this is how you can also help erect a wall. Now that I think about it, literally just popped into my head. The reason why, I've said this before, but this is the reason why. These should only be sold to American citizens.
See, that's actually something that I was wondering about, because if you make our gold, or the US's gold, redeemable,
right,
then that, puts an end to this era of, let's say, gold protectionism that Nixon erected, right?
Yes.
This opens the gold window back up. Granted, it's at a, very likely a longer term time frame if you're trying to get it. But, that's something I was thinking a lot about.
Well, there's two things you can do about this. One, you make it only, they're only purchasable by American citizens. Mm-hmm. And I don't even mean like American citizens, and not even and I don't even think they should be for their LLCs, to be honest with you either. Like not American LLCs, but, and this is again gets into this thing. Well, okay, beneficial ownership that we talked about earlier. How, if you wanted to have it put it in your LLC or, investment, it would have to be structured in such a way that this would be for American citizens only. The gold, we recapitalize our own country, and we are the ones who benefit from putting the money back in to recapitalize the country, right? By mobilizing the gold reserves. And if the government fails, then we call then we're going to get all the gold at the end of the bond. And if the government does do what we want them to do, the bonds are callable in dollars later on. Mm-hmm. Like the same way that Greenspan bought all of those 13 and 14% 30-year treasury notes that Volcker issued. Remember, by 1989 and 1990, he bought all those back. They rose in price, and then when they fell, back into this, they rose in price, and then when they fell, and then as they started to fall, he started to buy them all back up. And he paid a premium for them, but he retired them. So he took that 13% off the balance sheet and replaced it with 7% debt. And we could do this, and that's another angle on this. So it winds up being necessarily a temporary bit of funding, but it's the kind of funding that, we control, the market now controls the value of, and, and puts the power, democratizes the power back into the hands of the people themselves. And again, not investable by foreign countries in any way, because then that is literally why Nixon closed the gold window. because the gold was all flowing out of the country. Well, no, we don't want to do that. And that's what I'm getting. That's another way of saying exactly what I said about an hour ago, which is there's going to be a domestic dollar and there's going to be a foreign dollar, which is, again, Vince and I started talking about that idea about 18 months ago on my podcast. There's multiple episodes of us talking about, the erection of capital controls around physical gold to keep it from flowing around the world. Vince has been on this kick for a long time. He and I've bandied these ideas about. And I think that I think we're in the right frame of mind when it comes to this. So if it's structured properly, it will be absolutely accretive to the balance sheet of the United States and to the people of the United States to recapitalize the country. Now imagine these things being, on the balance sheets of small and medium-sized banks as Americans start to save dollars, and the banks go out into the market and buy these bonds to hold as collateral against the liabilities of the deposits again on their balance sheets. And those are now rising, and those are rising and gold rises in value 10% a year. Now all of a sudden, passbook savings 5, 6, 7% becomes a thing again. Now you're, there's so many different ways this thing gets improves the system. So, kudos to Judy on this. Like, absolutely kudos to Judy on this. The more I think about the possibilities here, the better the idea just gets and gets and gets and gets. But it all depends on our desire and our willingness to effect real change. And then we can put in place those things that will support that at a structural and durable means that can't be undone at the next election cycle. So this is I think the big takeaway here for the Trump administration is to do exactly that. It's what I've been saying now since the election, which is that Trump and he's going to be fought like you would not fucking believe. He's going to be fought at every fucking turn. They're going to fight him on every inch of this because they understand exactly what I'm talking about. But if he builds infrastructure, financial and otherwise, and political and regulatory into the United States that is durable and generational, they will not be able to take this to undo this 4 years later. What they're going to do right now, and what they're already starting to do, is exactly what they did with Brexit, which is first they devalued the pound and they crashed the purchasing power of Britons. And then they didn't allow anybody to come in and use the weaker pound to invest in Britain. They starved them of money and they starved them of their purchasing power and they destroyed them. Then they gave them COVID. Then they a bad Brexit deal, and then this, and then this, and they blamed it all on Brexit. Every fucking bit of it. It was an operation from the moment Brexit was finished. And it actually started 3 months before Brexit because they started devaluing the pound on the threat of Brexit. And that's why I thought about this about 4 or 5 months ago, and I started looking at the euro pound cross, and realized that the Europeans were defending 83 cents on the euro versus the pound. They did not want to see the pound rise versus the euro below that level. That level drops. So if the euro in the currency, if the numerator drops, then the numerator is the currency that's getting killed, right? So they were defending 83 cents as the floor on the euro pound cross. Well, it's been breaking down, folks, and every day they keep trying to push it back up to 83 cents, and it keeps crashing below it. And now it's playing between 82 and 83. It's going to let go at some point, and it's going to come down to. And that's why I think Musk and Trump and company going after Keir Starmer the way they are, they're trying to break what's left of the United Kingdom away from Davos and trying to break the back of the Davosian globalists that are currently running the UK. The UK is not a monolith. There's any more than the US is a monolith, right? There are two major, if not more, major factions that exist within the United Kingdom. And the United Kingdom can be saved. And I've always said that Trump is a royalist. He has a soft spot for England. And I I think that's beginning to play itself out the closer we get to the inauguration. And I think he finally just read Nigel Farage, the Riot Act, and said, "You got to stop being a pussy. It's time. It's your time. You need to become prime minister, and you need to save your country."
Mm-hmm. So with this goal of Trump being able to build some systems, some institutions that they can't touch, come in and just completely clean out in the next 4-year cycle.
Right.
What can go wrong there yet? Like, what wrenches can they throw into that process, or what derails that program?
They fight him on immigration. They fight him on going. They try and get him involved in World War III. They try and all the things you see them fighting him on. Right? They're going to fight him on drilling. They're going to fight him on reforming Congress. They're going to get him to spend more money than he wants to. They're going to try and split the MAGA movement 18 ways from Sunday. Why do you think they help? Why do you think the H-1B visa thing was so effective? It was because Musk and Vivek and all of these kind of tech, these kind of vaguely spurgy tech bros and libertarian tech bros don't have the political sense to understand how deeply angry Americans are at how they're being replaced. And so they just look at things they kind of do a first order analysis, and Vivek certainly stepped in this and missed this completely. This could not come from Vivek. By virtue of the fact that he's Indian, cannot come from him. If it came from J.D. Vance, then we would just have called him a race traitor, right? But you know what I mean? Like, coming from it was too much. So the idea is, but it was very obvious that this thing was amplified. So these guys revealed who they were or what they felt about this particular issue, and then the pile-on was completely out of proportion. And amplified to the high heavens. It's like The Last Jedi all over again. Like, there's a certain very vocal minority of Star Wars fans who hate that freaking movie, and everybody else doesn't really give a shit, and yet they're all over Twitter. Well, it's the same thing with this. And I saw it within my community. I saw it on Twitter, saw it everywhere. I'm like, you guys are like falling for I know you're angry about this. I know you're pissed off. It's the same thing with all the anti-Semites who came out of the woodwork after October 7th. And and Israel's behavior, shameful as it is, over Gaza. Like, you finally were given the pressure release valve to vent your spleen and vent your anger over this, and you took it and you ran with it, and by doing so, and by going overboard on it, and by allowing yourself to be triggered over this, you've actually now you're carrying water for the very people who are trying to destroy you, because now there's a certain segment of the whole MAGA crowd that hates Elon Musk, that hates Vivek, that hates this guy. And now they're like trying to transfer that to Trump and yada, yada, yada. And it's a typical divide and rule operation. It's so obvious to me, but it's an effective one because they had a good psychological profile on Vivek. They had a good psychological profile on Musk, and they had a good understanding of the zeitgeist, which they helped foment by seeding a lot of this into the zeitgeist, because there's a lot of people who are major vectors of this kind of thinking who I suspect are all feds. And so we live in an age where we can't trust anybody anymore. Everybody's on edge. Everybody just wants one white knight that they can have a noticeability that they can rally around. Every issue, if you turn every issue into a black or white issue, you have to choose a side. How many people have called me a Zionist shill for refusing to take a side between two groups of people who are not a credit to humanity, the Israelis and Hamas? Sorry, can't take a side here. The only people I'm on the side of are the victims on both sides. So now what? Like, when you do that, you preclude the possibility of there being any kind of rational discussion about it and understanding of who benefits from creating that division. And that's where we are. It's a classic, thesis, antithesis, synthesis, the whole Leo Strauss thing, what I call the Straussian two-step. Classic. And this one's really obvious. And, once everybody's calmed down, they've taken a deep breath, they've gone out, they petted their dog, they've taken a walk in the woods, and they come back and you're like, yeah, okay, you got me that time. I mean, it's not to say you're wrong and that we shouldn't revise H-1B. We absolutely should. And Trump clearly sat on Elon right after this all blew up, and Elon had to basically say, "Oh, yeah, that has to be reformed." Clearly, but and Elon's got himself a real problem. He's going to have to learn to be a lot less reactive, because he's clearly not ready for prime time at this level of politics. Mm-hmm. Neither am I. That's why I don't do it at his level. Like, what the hell with that shit? I get to come on your podcast and just say whatever the hell I want to say. And I like that. I like that role. That role's good. It suits my personality.
That luxury in some ways.
Yeah, and it's a luxury. It absolutely is a luxury.
Yeah. Well, Tom, I think that's a good place to wrap up. We've touched on a lot of things, and it's funny. I always find these discussions that we have as a time capsule, really, of
right.
What were the information that we currently have, right? And this is an ever evolving game that we need to figure out and to account for all of the different pieces being constantly thrown at us.
Mm-hmm.
Is there anything that you'd like to leave our listeners to think about before we do?
I think we covered everything, to be honest with you, Tom. I don't know if I have anything else to say. Well, okay, I will say this on the backside of it. If you thought 2024 was crazy, 2025 is going to be worse, but in different ways. And it's going to be different. It's going to be crazy, but we've turned the corner. I really do think that we're on a different path than we were 6 months ago. And honestly, just under 5 months ago, July 13th, I think is the date we should all keep in the back of our heads. And I think that I'm going to get a little philosophical. We are the universe. We decide how things are going to move, not them. We have agency. We are not powerless. They want us to believe that we are powerless. We just proved to them with this election that they are not powerful. Now, did we have help? Yes. Did we? But from that perspective, identify the people who are at this moment in time on your side, support them in those endeavors, hold their feet to the fire in others where they're wrong, i.e. Elon and Vivek and the H-1B issue. Use that as an example of the limits of what you're going to give your positive energy to. But ultimately, I am a curmudgeon, but I'm a curmudgeon that looks up, not down, because I don't want to leave this life in a worse state for my progeny and everybody else's. Mm-hmm. And that's the way we have to look for solutions on the horizon. And we have to read the tea leaves in such a way to say, these are the potential ways of getting out of this. If we don't, and here's some supporting evidence as to how some of it is playing itself out. If I didn't see those things, I wouldn't come in here and say the things that I do. I would say the exact opposite. But I do come in not shilling for anything other than what I think I'm seeing. And, we're in a better place than we were 6 months ago. And we should cherish that. And then we should build on it. And we should say, that's what we want. And we're not, and no matter what they put in front of us, we're not going to be dissuaded. Tough. You get to lose this time. We win.
I think that's a great way to put it, and something great to focus on, right? To frame all of these problems and then focus on the solutions forward.
Yeah. I mean, to pick whatever metaphor you like for doing that, chaos magic, astrology, this, that, praying to God, I don't care. Do it. Whatever works for you, whatever you need to get up for the game, right? The old Powerade commercials. Like, I'm dead serious. Like, I'm agnostic as to the method, because it really all comes down to the exact same thing. We as people have the ability to make a positive, and have the ability to say, no, I don't want to live in that world. I want to live in this world. Mm-hmm. Now I'm going to go live in that world. And that's it. I mean, if I know that every time we do these, we say we should, you ask me for book recommendations. Read The Man in the High Castle by Philip K. Dick, because that's what that book is saying at its core. You choose what world you want to live in. Okay.
Perfect.
All right.
And if you want to see Tom and I and the possibility at this point of Vince on stage in May in Calgary, check out the Cornerstone Forum.
Yes.
We'll give Sean Newman a little hat nod there. I'm really looking forward to that. And of course, Tom on Twitter at TLFL1728 and tomluongo.me. Tom, always a pleasure, sir. Thank you for your time.
Yeah, just one last note about Cornerstone, because I'm going to be in town around that for more than just the conference. We're going to do a separate Gold, Ghosts, and Guns event as well for the patrons and for everybody else. So I'm going to be in Calgary for a few days around the event as well. So I'd love to see everybody there. It would be great to do. We're trying to get Dexter White to come with us as well. So that'd be, I'm putting them on notice now of making them come. So there we go. All right. So with that, Tom, you have a great weekend and we'll talk soon.
You too. Thank you, Tom. This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.